All right, guys, Willie Mandrell, Mandrell Company, and I wanted to speak with you a little bit about 1031 exchanges. What is a 1031 exchange? How can you use it to grow your real estate portfolio and build wealth in real estate? So what a 1031 exchange is, it basically is a tax vehicle that allows you to trade up to larger properties. So let's say, for instance, you have a three-family and you have some equity and you're thinking about selling. If you sold that three-family, you are going to get hit with a capital gains tax, or you're going to get hit for capital gains taxes on the sale of that property. If the value of the property went up, if you've obviously been taking a depreciation allowance every year, so your basis is down, the federal and state government are going to say you received capital gains from this investment and you are going to get taxed on the sale. To avoid capital gains taxes and to use that money or that tax, the portion of tax that the federal government would have taken to enhance your portfolio, it makes a lot more sense to avoid those taxes and use that extra cash to grow your wealth and put it into the next property. So what a 1031 exchange allows you to do is to avoid capital gains tax as long as you're following the IRS rules and you are trading up or using the proceeds of that sale to fund your next property. So it's typically used to trade up for a larger property. So let's give you an example. I sold a $600,000 property and I bought it initially at, let's say, $400,000. I paid the debt down to $300,000, and I was probably going to have a capital gains. I was probably going to have a capital gain of, let's say, around $200,000 on that property, if not a little bit more. If I get hit with a capital gains tax and then use the proceeds to invest, I have less money to invest. A smarter, easier way would be to, not an easier way, but a more intelligent way would be to use a 1031, be within the law, use a 1031 exchange to trade up to a larger property. Basically what you have to do is you have to use a 1031 exchange company and you have to follow certain guidelines to avoid that capital gains taxes. You have to, I believe, identify a property within 60 days and close on that property within 90 days. And those laws are changing depending on what administration is in and where we are in housing and how the housing market is doing. Those are the type of things that you want to make sure that you're using a qualified company, because as those laws move and the rules change, you want to make sure that you are within compliance so you do not get audited or get hit with tax after the exchange. Make sure you're following the timetables and identifying your property and purchasing and securing the property within a solid period of time. So that's what a 1031 exchange is. That's how you can use it. Some of the best and the brightest real estate investors in the business are using 1031 exchanges over and over and over again to trade up to larger and larger properties and keep their money moving. They're constantly keeping their money moving. So for more information about 1031 exchanges or to be connected with a 1031 exchange company, please click the link below in the description. Tell us a little bit more about yourself and what you're looking for, and we can certainly connect you with some of the companies that we use on a regular basis. Thanks. Hopefully this was helpful.
Thanks for watching our video. Did you find this information useful? If so, please remember to like this video and subscribe to our channel for more helpful videos. I would also encourage you to share this video with your friends and your family. Thanks again for watching, and we'll talk to you soon.